Do you own multiple cars but use only one at any point of time? Are you a person who use car occasionally and hence overall usage is less? You can now pay less premium on your car insurance if your usage is less. You can do this with driver-based insurance policy which is introduced now in India. In this video, I will explain how to reduce your car insurance cost every year using this new type of car insurance called driver-based car insurance policy. Welcome to Save and Invest Smartly. The driver-based insurance is a part of the Sandbox initiative where insurers can experiment and test innovative financial products. The Sandbox approach gives an opportunity to experiment and learn about new technology and product before it's finally adopted and offered to larger set of people. The insurance company that has rolled out driver-based insurance is Edelweiss General Insurance. What is driver-based car insurance? This is a new type of car insurance that allow the car owner to switch their insurance on or off based on usage. For example, if you drive your car only during weekends, then you may switch on your car insurance only on weekends and keep it off during the other time as you may not use the car during that time anyway. You can do this switching easily through your mobile app provided by the insurer. This policy can also be bought as a floater policy if you have multiple cars or bikes. For example, if you have two cars and you use the smaller one during weekdays for your regular office commutation and you use the bigger car during weekends for your entire family travel, then you can cover both these cars under a single floater insurance policy. You can also switch on or off the insurance individually for each of these cars based on usage. That is, during weekdays, switch on the insurance for smaller car when you use that for regular office commutation. You can keep the insurance off on it during the weekends when you don't use it. And now, switch on the insurance for your bigger car during weekends and switch it off during weekdays. This way, you will be paying very less premium overall based on your usage. In this example, you may include your bike as well if you want. How is the sum insurance calculated if you include only one vehicle in this policy? If you have only one car and you want to use the driver-based insurance, where you can switch on or off the insurance based on your usage, then sum insured is the IDV of the car. IDV is insured declared value fixed by the insurer based on the brand, model, and age of the vehicle. It may be approximately equivalent to the market value of the vehicle. If the IDV of your car is 5 lakhs, then the sum insured will be approximately equivalent to 5 lakhs. How is the sum insured calculated for a floater policy, where you include more than one vehicle in the policy? If you have multiple cars and you want to cover all of them in a single policy, then you may buy floater policy with driver-based switch on or off option. In this case, the sum insured is calculated based on highest IDV value. For example, let us consider you own a bigger car and a smaller car, both registered under your name. If the IDV value for each of these arrived based on market value, or let's say the bigger car has 5 lakhs as the value and the smaller car has 3 lakhs as the value. In case of driver-based insurance, which is also a motor floater policy, IDV of each vehicle is calculated separately and the one with the highest IDV is the primary vehicle and the other vehicles are considered secondary vehicles. In our case, the bigger car is the primary vehicle and the smaller car is the secondary vehicle. The sum insured is the IDV of the primary vehicle. Therefore, the sum insured in our case is 5 lakhs. The sublimit of each insured vehicle depends on individual IDV. For example, if the smaller car is lost and you apply for claim under the floater policy, then the maximum claim is limited to 3 lakhs as per its IDV. With every claim, the sum insured of the policy will reduce. For example, if you have claimed 3 lakhs for your smaller car, when it is lost, the updated sum insured will be 5 lakhs minus 3 lakhs, which is equal to 2 lakhs. The sum insured will be reset to maximum value automatically during the next year policy renewal. But in case you want to reset the sum insured mid-year, then you may do it by paying an additional amount. How is the insurance premium calculated? The premium is calculated based on the number of vehicles added to the floater policy and also the driver profile like age, experience in driving, etc. The premium component for fire and theft is charged for the full year, while the accidental damage premium is initially charged for 60 days. And for the remaining period, you can choose the premium payment frequency. What are the coverage options that are available? You may choose any of the two coverage options available. Option 1, standalone own damage cover. Own damage insurance is a customized motor insurance policy designed to protect you and your insured vehicle from your own damages. That is, this policy covers against any loss or damage to your vehicle or its accessories due to accidents when driving. For this, insurance should have been switched on during this time. Loss or theft, fire or explosion, natural disasters, terrorism, etc. These are covered irrespective of whether your insurance is on or off, as these can happen anytime. Option 2, own damage with third party. This option covers everything in option 1 plus the third party coverage. Third party policy covers the insured against any legal liability arising out towards third parties due to accidental injury or death of a person and any damage caused to third party property. Let's see the advantages of driver-based insurance. You can save money on car insurance premium as you pay only for those days you use the car. Other days when you don't use the car, you don't have to pay the premium as you would be switching off the insurance. If you own multiple cars, then you may buy a single floater policy with the driver-based switching option. This will further reduce the insurance premium. A mobile app is provided by the insurer to easily switch on or off the insurance on your car whenever required. You may add or delete car from your policy anytime and premium will be adjusted accordingly. You can cover up to 2 cars in a single floater policy. If your usage is lesser than what you opted for, then the unused premium can be carried forward to the next year. As you need to fill up proposal forms and do the documentation only once for all cars together in a single floater policy, you save a lot of time. There is no hassle of remembering multiple renewal dates. Just remember one date for renewing the policy in a year for all cars together. If you have to update some details in your policies like change of address, etc., you may do it in a single go for all cars together. All other regular motor insurance benefits like no claim bonus, cancellation, etc. are also available on the motor floater policy. How to apply for motor floater policy? If you want to get the insurance from Edelweiss Insurance, visit www.edelweissinsurance.com. You will see the features of the driver-based floater policy called Switch. You may scroll through and read about the various features. Fill up your age, model of the car, PIN code of your location, your age, and the number of years experience in driving. Click on Get a Quick Quote. On the next page, you will find options to add additional drivers to the policy if you want. For example, if your wife also drives the car, then you may select 2 drivers. You will be shown the maximum sum insured based on the IDV of the car model that you selected. If you want to have a lesser sum insured, you may choose that from the drop-down to reduce your premium. If you want to add the third-party insurance as well in this policy, then don't tick the first checkbox. But in case if you already have a third-party insurance separately for your car, then you may tick this. Now tick on the second checkbox and click on Quick Buy. On the next page, you will get the option to add the third-party insurance. Click on the first button to add the third-party insurance. Finally, tick the checkbox and click on Buy Now. This will take you to the next page where you will be asked your name and mobile number. Once you enter the OTP and confirm your mobile number, the insurance agent will contact you to get further details from you and proceed with the documentation. You may further refer to Edelweiss Switch Policy illustration document to understand more about the switch policy. For example, the illustration shows that if you own a SUV and drive it only during weekends, then you can buy switch insurance policy for your SUV and save 43% when compared to traditional car insurance. If you own a car and a bike and you buy a switch floater policy for your car and bike together, then you can save 10% on your premium payment every year. Same way, if you own multiple cars and you buy a switch floater policy for both your cars together, then you can save 20% on your premium payment every year. The driver-based floater policy will definitely save you money on your car insurance if you use your car only on certain days. Give it a try when you apply or renew your car insurance next time. Let me know your thoughts on this new policy type in the comment section. Also, write down if you have more queries on this. Hope this video was helpful to you. Subscribe and hit the bell icon to watch more such videos. Give a thumbs up if you like the video. Thank you.